Angel Broking now joining in. Mayuresh, morning. Thanks for joining in. Mayuresh, how comfortable are you with the markets right now? I think that's the important question to ask, because we are in uncharted territories. Most traders are being warned to stay cautious. Of course, we are trading very close to important levels of resistance. But on terms of fundamentals, earnings so far, and of course low crude prices this morning, how would you sort of react to the markets?
Morning, Samina. So I think three factors. I think the strong footing that the markets probably are deriving is the earnings recovery and strong earnings momentum to continue. So you're right, I think the earnings season so far, though a mixed bag, I think the positive surprises outweigh the negative results far better. On the other hand, when you're probably talking about the global cues in terms of central banks actually hiking up rates, and what probably is expected to happen with the trade tariffs, with China imposing tariffs again and the whole brunt being felt if the whole thing goes out of hands over the next few months, and a hard landing of Brexit. So I think the markets are probably factoring a whole host of these global headwinds. And on the domestic front as well, apart from the political scenario over the next few quarters, what probably happens in terms of oil prices and the rupee depreciation, and again the inflationary factors with the fisc and the current account deficit being at the forefront. The markets have climbed these walls of worries, and with the results that we've probably seen, I think a fair estimate in terms of a 12-13% earnings growth for the better part of this year and expected momentum to continue in the next fiscal is getting support.
Right. Mayuresh, from what we saw from the pharma stable so far, Cipla, Lupin, both those numbers were reported yesterday. Lupin, of course, the markets don't seem very pleased. The stock should be correcting a little bit more this morning. How did you read into these earnings? Do you think this is a buying opportunity on both those counters or either of those counters?
No, Samina, so I think clearly Lupin has disappointed. So I think there was expectations that the US sales will be softer, but the extent in terms of the margin erosion, I think it's much worse than what we and the street had pegged in. On the other hand, you're probably looking at a softer fiscal this year. I think management had alluded that, and what happens in terms of the resolution of both its Goa and Indore plant will go a long way in terms of the specialty pipeline that Lupin has with 36 FTFs. The Japanese acquisition, the Indian formulation business probably look on track. But yes, I think further weakness based on numbers for Lupin not ruled out. Cipla, again, I think reasonable set of numbers. The expectations of the ramp up in the US business in the second half, along with expectations in terms of the complex inhalers, specifically in the European markets and the British markets, Advair is going to be extremely critical. What they've probably done in terms of even the domestic formulations, I think, is going to be on a very strong footing. So I think the whole rating probably continues for these names. From the bottom-up approach, we probably like it collapse, which probably presents its numbers today based on the facts that the domestic formulations and the global tendering business should probably do well for them in terms of earnings growth.
That's the word coming in on Bank Nifty. Mayuresh, HPCL, BPCL and IOC, these stocks are reacting in the interim to, of course, lower crude prices. But reality remains that numbers were disappointing from HPCL and BPCL. How does one approach these names?
So I think a large element in terms of the reported numbers, I think the core refining margins obviously lower than what one had expected. What you also saw is an element of inventory gains actually hitting both their marketing volumes as well as marketing margins. I think that is something which has seen an uptick in terms of the reported numbers. The second element obviously is how the crude and the rupee dollar equation pan out, because these are two important factors which determine the sensitivity to earnings for these OMC stocks. So I think one really needs to go with certain presumption and assumptions that if crude probably stays in a range of $70 to $80 a barrel and rupee probably between 68 and 70, I think if they hit their higher end of the ranges that we are talking about, you're probably going to see detrimental effect in terms of the earnings profile While if it stays on the lower end of the range, I think the kind of earnings deterioration we've probably seen in terms of stock prices actually correct. I think they're imbibing a lot in terms of what can actually go wrong. So to that bit, again, I think the expectations for these companies to probably show a reasonable amount of growth is constrained because of this environment. And a large element in terms of the capex plans, I think when these capacities come on streams with better complexities, the refining GRMs are obviously going to see an uptick. The dividend yield and their investments on their books probably are supportive at this point of time. But our top pick probably, Samina, still remains IOC, and that mark of around 150 odd rupees I think is an ideal point of accumulation if that stock does correct. But valuations from a long-term perspective do look attractive for OMCs, but IOC remains our top pick in this space.
Right.
Mahiresh, you want to come in on this news? UPL, of course, has been in the news lately on that big acquisition that they made. Now going ahead and looking at another one. Kaveri Seed is a trader's favorite as far as the stock goes, although has been, again, a little volatile lately. What do you make of this?
So morning, Dipanshu. I'm not really sure of what the speculation on the street is, but if you're probably looking at what UPL has done, both on a standalone financial performance and the proposed acquisition that they are embarking upon, I think the synergies are going to be obviously inbuilt over a longer period of time. And though one builds in a greater component of debt probably coming through, I think the cost synergies along with the expectations in terms of what they can actually deliver in terms of the complementary products, if the merger does go through eventually, I think is going to be of huge benefits. Again, UPL on a standalone basis with its integrated operations obviously stands out. And the biggest risk element for these parts of businesses obviously are the vagaries that you probably see in terms of weather conditions. But leaving that aside, I think on a historical basis and with the proposed acquisition actually coming through, I think UPL does stand on a very strong footing. So from an earnings perspective and a return ratio profile, I think it does stand out within the agrochemical space. So yes, I think the whole recommendation on UPL continues. Not really sure about this news, Dipanshu, on what is probably expected to happen in terms of the speculative nature of transactions going forward.
Mahiresh, Bharat Forge initial earnings coming in, we'll get a little more details for you. You had Motherson Sumi a couple of days back. The street gave those numbers a thumbs down, although the numbers weren't all that bad. What's the call here on these couple of auto ancillary names? In the broader space, you've seen a lot of traction in something like an Exide as well lately.
Well, yes, I think Dipanshu on a year-on-year basis, because of the low base that you talked about, has positively influenced their earnings. For Bharat Forge in particular, I think the numbers which have come, I think yes, good set of numbers coming through on the base that Class 8 truck orders have been doing exceptionally well. But even the Class 7 and Class 6 truck orders are probably on a very, very strong footing at this point of time. So when you're probably talking about volume growth, both in terms of tonnage sales and the expected realizations, I think both of them are expected to show a significant uptick over the next few quarters and years. And as they sweat their assets, I think that's going to incrementally add to their ROCEs. So yes, I think as a space, I think looks very, very interesting. For Motherson Sumi, again, in general, it's a very strong order book of 17.6 billion euros. What they've probably done in terms of its subsidiaries, I think in turning it around, PKC has started contributing very well. What you probably saw in terms of SMR, because of the dampness you probably seen in orders or the execution both from Kia and Hyundai, I think some uptick can be expected over the next few quarters. But the margins largely have held up. PKC margins expanded, SMR, SMP margins obviously expected to stabilize and gradually improve. So this looks on a very strong footing as well. But what we probably like within this entire space, and you're right, I think the auto ancillaries is a large universe, but Mahindra CIE on declines is something we'll continue to like. And Exide and Amara Raja, I think, with the lead prices actually coming down and expectations of strong volume growth and realizations improving, I think the earnings trajectory should also improve for these battery makers.
Yuresh, staying with the auto pack, Eicher Motors will report today. Would you initiate any positions ahead of earnings, and what are your expectations as well?
I think very strong volume growth expected. So I think a 25% top line growth is something that we're probably penciling in at this point of time. What we probably expected to see is a better product mix, which means that the realization growth should also be equally strong. And again, what you've probably seen in terms of the waiting timelines, I think those timelines should probably start reducing as the production capacity ramps up and the utilization thereof starts improving significantly. What you've probably seen in terms of announcements made by Harley, again, I think it's a very long drawn-out plan. So I think in the interim time period, I think RE is going to continue showing its good show. What probably happens in terms of the other business legs, the commercial vehicle segment should probably start holding up as well. They've given a very good show over the last 2 quarters. My own sense is that the good momentum should probably continue. Yes, you might see disruption from a short-term perspective because of the axle load norms, but I think even that part of their business should probably hold up, giving the SOTP valuations probably a boost over the next few quarters and years. So the positive view in terms of earnings growth still continues. Valuations might be a little bit rich, but I think the premium valuations are here to sustain because of the strong growth patterns they're exhibiting. Clear disclaimer, we own this stock in our funds.
Always great talking to all of you. Jay, Gaurav, Prabhakar, Himain, thanks for joining in this morning. The markets are looking good. I think the uniform call is the pharma pack. Stocks like Sun Pharma are up at levels of 585, seeing a big up move. The Nifty as well trades 11,477, 0.25% higher. Bank Nifty is holding itself together, seeing a gain of 0.5%. And the broader markets are also performing in line with the benchmark this morning. ICSE